When we look at the Magnificent Seven, and if you're not familiar with it, quick Google search is going to show you this accounts for 1/3 of the index. That is right. 33% of the index is into 7 stocks that are in the S&P 500. That can be very scary. And the alternative to this is the Invesco S&P 500 equal weighted ETF. So the difference between it provides exposure to those same companies, but it eliminates the concentration problem that they're really talking about with Goldman Sachs by weighting each stock evenly. So even if you have a company, that is $5 billion and you have a company that is $5 trillion, which we haven't reached that figure yet, they are going to be invested into the exact same. The exact percentage is going to be in there. Now, the use quotes because really the problem is only being seen by them and a few other analysts. I see a lot of places where JP Morgan, Bank of America, a lot of other financial institutions and a lot of other experts are saying the S&P 500 is going to have stellar years in the future and they're going to continue. Now, the Magnificent Seven are some of the most fundamentally sound companies in the world, and these are global companies. When you look at their net profit margin, it is more than double that of the other 493 companies in the S&P 500. That just gives you a scale of magnitude that we see without these. However, when it comes to earnings growth, and this is again where it kind of gets interesting, the Magnificent Seven, they're expecting it to slow down significantly next year, while growth across the other S&P 500 companies is forecasting to accelerate. Now, this is something that we've seen and that, again, a lot of analysts have been talking about. When we start looking even outside of the S&P 500, that we're going to see an incredible amount of growth in the next 3 to 5 years out of our mid cap and our small cap ETFs and those mid cap and small cap companies that are contained in there, which could really make a difference for a portfolio. Where if you are holding everything just in the S&P 500, market weighted cap might really make a big difference if those larger companies are not doing as well as we think. And of course, there could be some significant headwind with the traditional S&P 500.